Welcome to Deep Dive. I'm your host, Kevin Benedict, and I want to thank you for joining us today. This week, I'm reporting live from ASG Technologies User Conference, and it's called Evolve 19, and I'm thrilled to introduce the CEO of ASG Technologies, Charles Sansbury.
Thanks very much for having me. And again, we appreciate you taking the time. So hopefully you're enjoying your time at Evolve. It's really an exciting time for us in the company.
Oh, absolutely. And today was kind of the big opening general session. You were on stage announcing a lot of things with your team as well. I thought it went pretty much without a hitch. And I thought the messaging, the futurist, all that was very interesting this morning.
Yeah, I appreciate you saying so. We try very hard at these events to make them useful to customers. We could come in and have a bunch of fancy graphics, but really we focused a lot on the content and making this a useful experience, because right now our customers have so many ways they can spend their time that we need a hook to get them here. And hopefully the hook is you can learn something and walk out here knowing a little bit more than you did when you walked in.
Oh, that's terrific. And what I loved about it is that I could see the personality of your team when they're on stage too.
Mm-hmm.
They can joke a little bit. They're having fun. They weren't taking themselves too seriously. And I think that's all, it helps you relate to the folks on stage.
I think, we did some product demonstrations on stage, and we're relying on the hotel wireless network for the product demonstrations. So the angst and concern that you saw among the folks doing the demos, that was real.
Yeah.
And if you've been using the wireless network while you're here, you know that it has a certain amount of patience.
Yes.
And so some of that was emotion for the stage, and some of it was actually real. And thankfully, the demos went off without a hitch.
It did. And I did have struggles with my own Wi-Fi, so I can appreciate it, and I know it's real.
Exactly.
So what are you most excited about sharing this week with the attendees?
The little bit of the backstory is a lot of the leadership team joined the company in late 2015 when the company was emerging from some relatively tough times. Mm-hmm. And we spent a lot of time over the last 3 or 4 years focusing internally on fixing some of the infrastructure, recasting the company, looking at a broad portfolio of products and kind of narrowing and prioritizing and trying to focus on doing a few things better. And a lot of that involved recasting some products, recasting some organizations. And that's always very hard and arduous work. So I think what's most exciting for me is this is the first time where we've kind of stopped focusing internally. Last year at this event, I talked about the transformation we were undergoing. This year, we talked about the transformation that we've completed, more outwardly focused around customer needs, new product introductions, a lot of opportunities that we couldn't have addressed last year because we're kind of too busy fixing our own house.
So let me ask you this as the leader of ASG Technologies. Is it easier if you would have taken over a startup and built a startup from the ground up, or trying to transform a legacy company?
Boy, that's a good question. And early in my career, I was at something of a startup. It was post-IPO, but it was still in that meteoric growth phase. Yeah. And there you kind of had a blank slate on which to work in terms of culture and process and people and things of that nature. So while that environment is hard, you have, I think, a lot more leeway to make change. What I found at ASG is because there was 30 years of history, there was a way of doing things. There was a group of people who were very focused on the history. You have to be more sensitive to that when you make change. So you have to kind of listen and understand. And I hear your concerns, and I know, and here's why we're not going to break this while we do this. And so I think you have to be a little bit more measured in terms of how you articulate and drive change. The other thing is, in a startup, it's kind of like a new neighborhood, right? Everybody's just moved in; they're all new. In a more mature company, there are people that have been there for a long time, and there's a lot of information and knowledge and value that you can get from those folks. But there's also the case that you need to make some change to inject some new thinking into the company. So the other thing that's maybe harder than I would have guessed is finding that right balance between, building teams that have some element of folks that have vintage and time with the company, but overlaying or interjecting into those teams newer folks that bring new ways of doing things. I don't know that there's precisely a right answer. It's kind of an ongoing balance, but that's been very hard. So as I think about it, it is the case. I think it's the case that's a little bit harder coming into an existing situation because there are more variables that you have to manage, more fixed constraints that you have to work around.
So Charles, when I was doing research on ASG Technologies, I was wondering to myself, did Charles just think startups were too easy? And so he was looking for a bigger challenge?
Yeah.
What attracted you to ASG Technologies and this whole transformational project?
Well, so the last company that I was with, we were acquired by a larger company, and I was helpful to that company in transition and trying to figure out how the two companies could work together. It gave me some insight into from the other side. Typically, I'd always purchase companies, but as the acquired, it made me think a little bit about building companies going forward. I got involved with ASG first in an advisory role as being helpful to some of the folks who were investors, and along with Swami Viswanathan, who I think you're going to meet a little bit later on today. Swami's a very deep technical thinker, but he and I were providing some help and some advice to the investors and owners of ASG. And as we learned more about a combination of the products, the customers, really the markets that they served, I think what collectively the two of us arrived at about the same time was that although the company had been through some near-term difficult challenges, those were primarily related to the balance sheet and its financial structure, and the new investors had come in and fixed that. And so I looked at it as good business, good products, good markets, good customers, bad balance sheet. The balance sheet was fixed by the new investors, and what that meant was we had a much more logical capital structure, a much more thoughtful investment model. And what that left us with was good products, good markets, good customers. And the product still needed some attention, some tender loving care, if you will. But we found the foundation to go build what we have today based on those building blocks that were, in hindsight, very strong products in very strong markets that needed some revitalization. But that was a strong foundation point from which to start. The other thing that was important was that we to do that, we had to have a business of scale. I talk about scale being very important in software. And it's kind of an amorphous term, but what it really means is we sell big pieces of technology to global organizations, banks, insurance companies, multinational manufacturers. What that means is you have to service those companies in the places where they operate. So we service companies who have divisions in the Asia Pacific region, in Australia, in Europe, in Latin America. To be able to have a company that can support all of that, you can't be a startup with 10 people in a garage and a dog running around, right? You have to have buildings with support teams and salespeople who can call on you in multiple geographies. And so scale in software really becomes important to be able to serve these large global customers. The other thing that was important to us as we looked at the goal for ASG was to have a foundation of scale so we could build upon that foundation to build a company that services these large global multinational organizations.
Wow, what a challenge there. Now, I imagine as you came in and your leadership team came in, one of the key things you would need to do is say, where are we actually wanting to take this? So as a leader, what resources do you kind of tap into when you want to see what's over the horizon and where you want to take the company?
Well, my background is largely finance. I started in investment banking for software companies and became then a CFO and then ultimately CEO and to this role as CEO, which means I'm not the technically deepest pond in the forest. But having that view is important. And so we have a group of people, led by Swami, but we have a broad group of people who are looking at markets and trends and directions. But I think that there are some fundamental baseline principles around software that we have learned across other companies, both startups and more mature companies where we've all worked. And that is, at the end of the day, the software that we make is a tool to help our companies run their businesses better, which means that what we can do to do a good job of delivering on the promise of software is to understand how our customers use our products, understand how they'd like to use them or how they can extend them, and then go back and build the functionality that helps them extend the functionality that they're currently using so they can be responsive to new business challenges, but actually to build products that help our customers run their businesses better. That seems pretty simple, but I've also seen over time you can have a very successful product, a place in a market, and you think that, oh my gosh, we should go way over here because we're really capable software people. I think it's the case that a successful software product is something like catching lightning in a bottle. And it's hard to recreate here and over here. So that's why we think about building out in kind of concentric circles of complementary technology as opposed to jumping over and thinking that we can go way over here and be successful in some new market. So we applied that to the product sets around ASG, picked the strongest core product offerings that we had, and we began to build around those. And so that was a pragmatic approach to how to extend the business. And then the kind of the ones and zeros of what we go build and how we go build it is something that our products team has been massively focused on for the last 3 years.
Oh, wow. That's so interesting. It's such a big challenge there as well. So when you come in and you're taking over this company and you're looking at ways to improve it and to scale it and to reorganize the products and things like that, it's not just about technology, though, is it, when you're trying to transform a company?
No.
It's everything from sales and marketing to customer support, and it's moving from on-premise to hybrid models and to cloud-based models and all that. So where did you see the other things that really needed to be adjusted?
So I went and talked to a bunch of people that I was familiar with about how they approached not similar challenges, but transitional challenges.
Yeah.
And everything you talked about was important, but actually the thing that I'm most worried about was communication of direction and trying to build a positive culture. I knew we were going to have to make some changes. Some of those changes were going to be tough changes involving changes in focus, changes in priority that also meant changes in how we actually balanced resources across the company, including resources and including people. And those are always difficult decisions. And so what we tried to do is to establish a direction of where we were going, why we were making the changes that we were making, so that people understood we had thought about what we were doing, we had made a bunch of trade-offs, and we're making the best logical decisions we could for as many people as we could that had the best chance of improving the overall potential outcomes for the business. And so that transparency of what we were doing, I think was very helpful. So people at least understood what we were doing and why we were doing it. The articulation of the goals and then also sharing progress along the way, both good progress and bad progress, meant that I think people had a better transparent sense that we were trying to be good actors in transitioning the business. Now, did everyone agree? No, there were certainly, some enthusiasm was greater in some places than others, but I really worried about culture and communication and transparency so that people understood what we were doing and why. And I think that was probably, continues to be one of the most important lessons from this, that as you say, the sales and that you can drill down into 100 different things, but really getting our leadership team on the same page in terms of the direction, having them broadcast out to their teams what we're doing and why was, although it seems very simple, one of the most important parts of the exercise in getting the transition going and keeping it going in the right direction.
I spent 5 years as a CEO of a mobile application company. And I think, looking back on that experience, I lacked transparency as a leader. And I think that was probably one of my biggest failure points. And so I'm just learning, years later of all these mistakes I did. What's your approach toward transparency? Is it better just to lay it on the line, or what's your philosophy?
As much as possible, but you can't be completely transparent. One, because there's some things you just can't share broadly. But two, sometimes transparency comes in layers. There are some things that you can't share initially because they may be so transformational that people get super concerned. But my bias would be transparent as much as possible wherever possible. It's a little bit easier in a private company context because right now I can talk more about our financial performance, the investments we're making, the decisions we've made, and I can do it in a full company briefing where it goes out on the web. When you become public, it actually gets much harder because of all the various disclosure requirements and your real lack of ability to be precisely communicative of all the financial goals. So I do think that we benefit from being a private company because we can be more transparent and share more information. Our bias is to share as much as possible, but you can't share everything. And I think that's one of the other important points is, be careful when you talk about transparency because you'll never be able to be transparent about everything.
Got it. So we've talked a lot about the last 4 years and the transformation that's happened there.
Mm-hmm.
Talk to us about your vision for the next 4 years.
Yeah. So again, success can be measured in many ways. From a quantitative perspective, software companies need to grow revenue because that says you're gaining market share, you're in meaningful market, you're in a place where customers want to spend more money with you. So the focus is on what do we have to do to drive a growing and profitable software company. So that means the innovation that we have kind of spent all this time internally focused on, we've just now in the last, actually an hour ago, introduced a bunch of those products to our customer base. So we're very focused right now on demonstrating traction in our new products, whether that be some of the new content and information management products, the capabilities in data intelligence, or even we've revitalized, I would argue, some of our mainframe-focused systems management products and given them kind of new market opportunities to go pursue. And that's critical, but it's also the case, like being a parent, we love all of our children, just sometimes they need different things in their life cycles to be successful. So we also have done a lot of work around some of our core, more mature products to make them more usable, more user-friendly, have better look and feel. And if I look forward, gaining market share, seeing revenue traction in the new products is going to be super important. But I also want to make sure that a year from now, the company's customers who are using more of those core mature products go back and say, you know what? We didn't abandon us. You in fact delivered more functionality here, and we're actually really excited to continue to do business with you. So it's a balance between importance of focusing on the new, but we can't get away from that foundation, those foundational technologies that are really the bedrock of the company.
That's brilliant. Charles, I want to thank you so much for sharing with us.
Appreciate your time.
And best of luck at the rest of the conference.
Thank you. And thank you again for attending.
Yes, and thank you for tuning in.